Well, happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties with another Monday market moment. Let me ask you a question. Do you want to make an extra $115,000? Well, we're going to talk about that in just a moment, and I'll teach you how. But first, let's look at the current stats in the San Diego real estate market. Right now, we have 4,785 homes for sale, 29 fewer than last week, with a median list price of $950,000. Average days on market is 54. Pending sales, 2151. That's an increase of 47 from last week. Interesting. Median list price, $869,000, and the average days on market, 33. Months of inventory is going up a little bit, 2.63. That's because of fewer sales, which we'll get into in just a moment. And here's the chart showing total actives and total pendings. You can see the declining total inventory that we've had over the last few weeks. So here is the Stephen Thomas reports on housing from this past week, and this shows active listings, and you can see how it has been coming down for the last few weeks, kind of in line with what it was a couple years ago. Last year, it was actually plateaued around this time, but now we are seeing the decrease in the number of homes for sale in the county. You can see compared to the rest of the years. Here's the demand over this year versus the last few years. You can see our demand has been coming down, although we saw last week pendings up. Our demand is still higher, however, than it was last year and it was the year before, but still lower than the years prior when interest rates were so low. So last week, we saw 649 homes come on the market, 31 more than the week prior. Median list price of $945,000, lower than the week before. New pendings, 369, 54 more than we saw the week before. Median list price, $899,000, higher than the week before. Average days on market, 30. New pendings listed within the last week, 17, and within the last 2 weeks, 110. So 5% of homes are selling in a week or less, 30% in less than 2 weeks. Last week, we saw 286 homes close escrow, 77 fewer than the week prior. That's why months of inventory went up. Median list price, $949,000, higher. Median sales price, $947,500, also higher than the week prior. Average days on market, 31. The least expensive sale was in Santee, $255,000. Most expensive sale was in Coronado, $14,250,000. Here's a chart showing new actives. You can see that new actives actually higher. So you would think inventory is going up, but we are seeing more homes going pending, and we also are seeing homes coming off the market, people pulling them off the market. And pricing, way higher than it's been in the last few weeks. Is that a new trend or is it just a 1 week blip? We'll have to wait and find out, but definitely higher than it has been. Okay, in the month of October, closed sales, and this is from Stephen Thomas's reports on housing, talking about if you don't have a price reduction, what your success rate is, if you have a price reduction of 1 to 4%, or if you have a price reduction of 5% or more, what that means for your final sales price, the ratio to the list price, and also days on market. So 70% of homes that closed escrow in October had no price reduction. Their sales to the last price ratio, 99%. So they got 99% of their list price. And obviously sales to original list price ratio, which is the same price, also 99%. Median days on market, 12. So that's the success right there. We want to be in that 70% if you're looking to sell your home. But what happens if you have to reduce your price anywhere from 1 to 4%? About 15% of the sales were in that category. The sales price to last price ratio was 97.7%. The sales to original price, list price ratio, 95%. Average and median days on market, 42. I'm going to give some examples in just a moment to explain further. 15% of the sales had a price reduction of 5% or more. The sales price to last list price ratio, 96.7%. The sales price to original list price ratio, 89.4%, and median days on market, 58. All right, let's look at some real numbers, and it'll explain further. So some examples. If you have a final list price of $1 million, so when you sell your home and whatever you sell it for, your list price is $1 million, okay? If you didn't have a price reduction, that means your original list price was $1 million. Your final list price was also $1 million. You sell it for $990 as an example, because you're getting, that's the median, 99% of list price. You're selling it for $990, $13,000 less than list price. Actually, I'm sorry, it's actually $10,000 less. 12 days on the market. So that's what we want to be in, right? Well, 1.4% price reduction, if you have to have one of those, your original list price would have to be $1,028,000 to get down to a final list price of $1 million. So you reduce it to $1 million. You sell it for $977,000. Again, those are using Stevens averages. That means you're going to get $13,000 less than in the first example. You're also going to get $51,000 less than your original list price, your first list price. That's a big drop. And you're going to be on the market for 42 days. Now, if you have to do a 5% price reduction and your final list price is $1 million, that means you have to start out at $1,082,000 to finally get down to $1 million. You reduce it to $1 million, you sell it for $967,000 because on average, homes are selling, if you have a price reduction of 5% or more, for 96.7% of your current list price. That means you're going to sell it for $23,000 less than in the first example of $1 million. You're also going to sell it for $115,000 less than your original list price of $1,082,000. Okay, so not only do you have a price reduction that because your home's sitting on the market and you have to reduce the price from your original list, from your current list price, but also from your original list price. That's a big delta. Overpricing the home is going to make it sit on the market. And if you have to have a price reduction of 1 to 4%, you're going to have pretty good haircut. If you have to reduce it 5%, you're going to make $115,000 less and be on the market for 58 days. So what's the moral of the story here? If you want to make $115,000 more, price your home correctly. That's the bottom line. If you price it right, you'll be in that 70% that will sell your home for 99% of list price in 12 days. Otherwise, you're risking being on the market for longer and making less than your current list price and a lot less than your original list price. That's it for this week's Monday Market Moment. Don't forget to scan the QR code to track your home's value. If you have any questions, give me a call. Happy to answer any questions you might have. And I look forward to seeing you next Monday in the next Monday Market Moment.